Hello everyone and welcome to today's Forex webinar. Thank you for your patience. We were just sorting out the audio. There's nothing worse than when you're doing one of these events and the audio is really not of a good standard, and David and I are very particular about it on our recordings and also on all our videos. So as I said, just took a couple of minutes to sort that out. Before we start, as usual, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. Okay, before we start, very quickly, I had a quick look down to see our attendees, and I can see we've got some of our program students, we've got some of our quantum trading users, and I've got see some names I don't actually recognize. So if it's your first time here, you're very welcome. And just to give you a very brief run through of what we do in these sessions, how we approach the Forex market, and really it can all be summed up in the books that are up on Amazon. In terms of technical analysis, we look at a volume price analysis, which is a relationship between price action and volume, and we also look at what is happening in the fundamental landscape, on the fundamental landscape, and also we look at related markets for sentiment, because as those of you who come along regularly will have heard us say many times before, what you're seeing on your chart doesn't move in isolation. It doesn't move in a vacuum, even if you are trading the very fast charts. The drivers for the for the price action are many and varied. And it's once you start to understand, first of all, what those drivers are, and how they kind of interrelate to each other, it really does help to make sense of what you are seeing. But we all start with technical analysis, we all start with a chart, and hopefully we all start with volume price analysis. And the best way to see it is actually see it in action on the charts, which we will do so in a second. Volume price analysis, I know those of you have seen this schematic many times before, but it really does explain it. I couldn't really explain it any better, in the sense that these are the 5 elements that make it up, which is the volume, the price action, the candles. We use candles and patterns that we see on the charts, and support and resistance. Now, the way we determine those important levels of support and resistance is we use price-based support and resistance. We have our own, we've developed our own indicators for that, but we also use volume based support and resistance. And again, we have come up with a particular indicator to help us with that as well, and that forms the foundation of your methodology. To get down back to support and resistance, you might use a Fibonacci, you just might draw some trend lines yourself. It really doesn't matter, but somewhere on that chart you have to be aware of these zones where price is aiming for, potentially. Is it going to pause there? Is it just a pause? Or is it going to carry on higher in the original trend? Or is it a point of reversal? And this is where all the other elements of VPA come into place. The price action, look at the volume, look at the candles and the patterns that develop at these important levels. Now, we call it support and resistance. You may have heard, what is the difference between that and supply and demand? Well, other than sort of semantics, supply and demand is going to be, if you like, a place where you're likely to get a reversal, because there are no more buyers. You're going to have sellers. There's going to be, more supply than demand. But the support and resistance levels is where you start. Whether they are those levels of major reversal, again, will depend on the price action, the candle patterns, and what is actually happening in that region. And as I said, the best way to see that is actually to see it in action now. So that's your foundation. On top, you can put your indicators, moving averages, you can use Bollinger Bands. It really, really doesn't matter. So we've developed our own proprietary ones. We've integrated them. Sometimes I use moving averages. I don't tend to use Bollinger Bands, mainly moving averages. David doesn't. He just we use our own indicators, as it were, but it doesn't matter. You can have these what we call secondary indicators, or you can have a blend of the two. And overarching everything is time, and that is not just the time frame that you are trading, but multiple time frames. And again, it's best when you see see my profile on MT4 for one of the pairs that I like to trade, which is cable, and you'll understand why multiple time frames are so important for all sorts of reasons. Now, having said we have developed our own indicators. They can be used across all markets, but for forex we have developed very specific ones, because for forex what we're looking for, essentially we are looking for currency strength, and we're looking for what we call currency weakness. We're looking for where is the flow of money going into. Is everyone buying the pound today? Is everyone selling the pound? Is everyone buying the dollar? Well, we saw what happened after the FOMC last week. And what these indicators do is they help us identify the flows, if you like, with the currency strength indicator. These are individual currencies. So we know, particularly in this 24-hour market with the session crossovers, there are 3 very separate sessions in this market, and you have to be aware that flows into certain currencies will be stronger in some time zones and not in others. You'll have local news which will also affect the flow into a particular currency. So that's how we sort of tease it apart. Then we put it back together in terms of the currency matrix, and that ranks the pairs. So as I said, this morning there's been selling of the British pound, but where's the selling most, where's it selling most strongly? Because that is probably going to offer the chance of a trade. And what we've done with an indicator which actually ranks the pairs, and we'll see that again. And we have a currency array, which is really much more a strength of trend. And we have a currency heat map, which looks at all the pairs, again, in this very important multiple time frames. Finally, I always forget to flick this one up. Those of you I know who are on the program will be aware of this, but if you invest in our forex trading program, it will give you the option to become one of our funded forex traders, which is basically you trade our money. It's not your money. There is a cost of entry, but that is it. It's a one-off cost, and you can work your way up to a $2 million account. I'll get David to explain it a little bit more as we go through the session. But if you've got any questions, please don't hesitate to put them into the chat box, and we'll answer them either on air or type the answer into the, as I said, into the chat box. Right, let me just close that down for a second now. I don't think I need this one anymore. No, that's it. Before we go and actually have a look at the charts, let me have a quick look at what is happening today in terms of news. I mean, clearly the market we are having a sort of reaction to the overreaction to what we had last week at the FOMC. We actually had the session on the Wednesday before the FOMC, and the market sort of collapsed all over the place in shock horror. But actually, when you step back and analyze what was actually said, it's really, well, not an awful lot. I mean, yes, interest rates are going to have to be, raised at some point. Yes, tapering is going to come along. But I think, is it 2023 was mentioned, David? Yes. But that seems to have been lost in the panic. There's some posts up on my site, annacooling.com. We really saw the market overreaction more. There's not a great opportunity for a bit of a shakeout, as it were. Now, today, though, is important because Powell is up again. He's this evening. He's in his 2-day testimony. Let's have a look. Let's have a look if it's 2-day testimony. He does a 2-day thing up in at the in front of one of the committees on thing, but it looks like it's just one. But anyway, he's up later on today. But can you please check your calendars? I reminded our students of this yesterday. There are Fed speakers. I mean, they're out like a rash at the moment. They are everywhere. And your calendar, if you use Forex Factory, may not have all of them. Now, the thing is with the Fed, is obviously there are a certain number of members that make up the committee, and they fall broadly into two camps, which are called doves and hawks. The way the market reacts to comments from these people is essentially, if someone who has always been considered a bit of a dove suddenly makes a hawkish statement, and by that, a dove is much more, if you like, their approach to monetary policies is much more laid back. It's much looser. They're happy to sort of print loads of money. You know, pretty much what's going on at the moment. Powell certainly sits in that camp. A hawk is much more, if you like, is not willing, not disciplined is not the right word, but essentially it will step in to correct what they think that, you know, things are getting out of hand much sooner. So, you know, they have two very different approaches, if you like, to monetary policy. Now, the markets react when if one of these sits in one camp and says something opposite to what they expect, and vice versa. And what's also happened because of all this hoo-ha with the FOMC, market doesn't normally react to members who have no vote, because there are some voting members and some not, because, you know, what's the point in reacting to someone who hasn't got a vote, who's not going to influence, you know, any decision. But they seem to have made the exception in Bullard. Was it Friday? Friday, yes, because Friday, Bullard was always considered to be a dove, and he made a hawkish statement. He said, yeah, interest rates, so, you know, we've really got to keep an eye on them, and we've got to raise them, blah, blah, blah. But he's not a voting member until next year. What I'm trying to say, at the moment, with last Wednesday's FOMC, there's an awful lot of hot air swirling around, and that will have an impact on the market, and it will have an impact on individual currencies, most particularly the dollar and also the Japanese yen, the risk, what are called the risk on, risk off currencies. So the Aussie and New Zealand may sell off. People will pile into the yen, they'll pile into the Swiss franc, and they'll pile into the dollar. Now, the dollar behaved in a lot of people couldn't really understand what was happening with the US dollar. This is the Dixie that I have on this account here. And we can see here from where are we? Yes, that's yesterday. That's Friday, Thursday, when it's, you know, it just completely went ballistic, as we can see here. As I've also said in one of my posts somewhere, there was an element of this move in the dollar that is what's called a short squeeze. If you may or may not be aware, but the CFTC, the dollar has been heavily shorted for most of the year. The shorts have been piling into the selling it. And what often happens in the market when an opportunity comes up to have a squeeze, where all these shorts are, you know, they have to cover, they have to then buy or roll out of their position. So that is the short squeeze there, and there was an element of that as well. Now, the dollar will also rise in times of market stress, if you like. Equities were selling off, the yen was heavily being bought. So it was performing as it should have performed, but it was probably a little bit out of, you know, it was a bit exaggerated, as it were. And yesterday, with the markets recovering, what has happened? It's gone completely the other way. Now today, a little bit of, you know, they're not really sure what's going to happen. You know, the interest rate narrative has been pushed to one side. What about the recovery? What's happening? You know, is it really going to, you know, is the economy really sort of roaring ahead, or maybe it's not so? So you have all these moods, this market music going on in the background, and that will impact the currencies. I think the best way to show you this, certainly with the matrix, this is of my screenshot from yesterday that was on a post on my Facebook page. And I just wanted to highlight this. Now, this was just before the New York Open. And the currency that I always look at for sentiment and the currency pairs are the yen pairs, and they're quite easy to track because the yen is also always the counterparty. Now, I didn't take the screenshot, which was my fault. But when in the morning, when I came to my computer, all the yen pairs were down here. And that is because overnight in Asia, the Nikkei had fallen over 3%. So there had been massive selling, buying of the Japanese yen, because Japanese yen acts a bit like Janus. It looks both ways. So it's bought when market is not feeling very positive, and it is sold when it's the market is happier to take on more risk. It's got a higher risk tolerance. And what was interesting yesterday, if you were trading yesterday, is we know there were some fantastic moves. There were really strong moves in a lot of the pairs, and certainly in the yen pairs. And we know this from the matrix, is because you look at these values here in the certainly these two in the 70s, that tells us that that was a good move. And you only have to look at yesterday's charts to be aware of that. Now, compare what's happening today. Let me take I've got the pound up at the moment, right? The numbers are very, this is the hourly chart. They're not really, of course there's movement, but it's a bit sort of sluggish. That's really the best word I can use. And these numbers tell us, and certainly you would not, plus 15.78, not that I'm suggesting the New Zealand Swiss, it's moving, but it's very, very desultory. The pound, in the meantime, we're going to have a look at the pound. Yeah, that's been selling off, but again, the values are kind of dying down, which is really what you don't want to see at 20 past 11 in London. Although it's not the deepest liquidity, it's pretty high. Its deepest is going to be when New York comes on board. But this is, it's a little bit, this telling us it's a little bit tricky. The currencies individually also tell us. What we have here is we haven't got these big, can you see these big looping moves from down from here to here? Everything is sort of a little bit in the middle. Doesn't mean nothing is moving, but it means it's a little bit sluggish. And that tells you, when you go into this kind of market, in this kind of doldrums type market, there is more risk, in the sense that you have to sit there, and then suddenly something could happen, and you get a burst of volatility, which I'm not saying that we want, like, so everyone wants Goldilocks, not too hot, not too cold. Everyone just wants to be so-so. The market doesn't work like that. But when you do have these kind of doldrums conditions, you can be putting more risk on the trade, and really, and also the risk comes from, you get fed up, you get bored, you get frustrated because it's not going anywhere. And patience is something that as traders we don't have a lot of, and it's something we have to develop. And it also tells us, given these numbers and given what this is happening here, is, well, do we want to wait? I mean, it's 20 past 11. Maybe nothing's going to happen much in London. What's the news today? Well, we've had where is it Tuesday? Well, there's not much going on in the news anyway. We've got Powell later on. Go and have a look at another calendar. What's happening over here? The futures, well, they're down. Okay, they're a bit down. They're down 22. What's the Nasdaq up to? That's that's minus 12. Let's have a look at the small caps. Let's have a look. What are they? Let's have a look. Oh, they're down 7. So yeah, stuff's moving, but certainly nothing like yesterday. And I do appreciate we can't always have days like we had yesterday and last week, but it just sets the mood. It sets the background for any trades that we may or may not take. Right, to go back to my profile of my cable. And when I said about multiple time frames, right, first of all, looking at the daily chart here, cable, obviously, there has been a really nice trend lower in cable from this congestion period. I'd actually thought that the volume point of control would jump up. But then with the FOMC coming on board, we had, these are the really nice big moves that we had lower in cable. Yesterday was a complete reversal because obviously with the US dollar, but it's back at the volume point of control. So we could have a period of congestion for cable. Now that doesn't matter as long as the range of the candles that we have in a congestion phase, like we have here and here and here, is going to be enough to give us a half decent trade in the faster time frames. When we have very narrow candles in a congestion phase on a daily chart, it makes trading in the faster time frames, I'm not saying impossible, but it makes it very, very difficult. So we're back in congestion, but there has been a bit of a down move. And the way I use, the way I've set up cable is I have the daily, I have the hourly chart, I have the 15, I have the 5, and I have a Renko. And this Renko is set at 2.5 pips, which means that one of these little bricks is displayed, is posted once 2.5 pips goes through the market. For some reason it should have been 3, and I don't know why I've stuck it at 2.5, but it's ended up there. Now what Renko does, two things, or does a number of things, but two principal things. First of all, it helps us with entries in the sense that, I said I talked about patterns. Well, what it does, it really highlights those price patterns. So we have like a little tiny double top there. We have a little triple top there. You can see a sort of V-shape pattern there. It gives us the pattern in congestion, and using those together with levels. Now I have here the Camarilla levels, which are price-based levels. They can help us with an entry. And once you have an entry using a Renko, what it then does, it can help to keep you in, because what Renko does, it absorbs any sort of volatility that you see in the price chart. Because when you compare it to see in the price chart, you're always going to get, clearly you're going to get the wicks, you're going to get the, you're going to get the volatility, perhaps trigger coming in. The congestion phases, you've got the volume down here to tell you, is this going to break away, or is it going to keep coming back when it's in a congestion phase? But what the Renko helps you with, it just smooths it out a little bit and just helps you stay in. And with the two indicators that I have on here, the trend dot and the trend monitor, that helps to hold you in even more. As I've mentioned before, I don't really use it for exits. What it does, it holds you in, and we can see here this congestion that's actually forming on the 5-minute chart, and we can see the congestion here. This is, if you like, this is the pound looks like it wants to reverse. So we've had the trend lower, the break lower from the volume point of control just at this is the London session. You always get nonsense at the London session with, volatility, traps pulling you one way, pulling you the other. Then we sometimes have a break, and then it's stopped at the R3. This is a little pause that we have here. The trend monitor stayed. Volatility, the volume tends to kind of die down in congestion phases because there's no direction in a congestion phase. It's really waiting for a decision whether to move lower. So this trend from here, you can say this trend from here to here is actually quite messy, because there's a breakaway, got on good volume. You can't say it wasn't on good volume. The up candle here, which almost went back to test the volume point of control, big up candle. London's been going for this big rush of volume, but the volume here doesn't tell you, it's not going any much very far, because for that size of candle you'd expect a lot more volume. Then you have the two the attempt to resume the trend lower. Forget all this here, but again that's not going very far, because you need volume to go down as much as you need to go up. But it actually stops at the S3. Now the S3 and the 4 of the Camarilla is really important. It's a level where price tends to pause, not always, but it tends to pause. But when you see that stopping on that level, with that, you know it's going to stop. So you think, oh gosh, is it going to reverse again? Yeah, you've got a bit of volume coming in. That's a doji candle. Then this one, this is an important candle, quite a widespread candle again. Didn't oh, the VPOC's moved down. That's confused me for a minute. This is the volume point of view, which is volume, price, and over time, and it's dynamic. So, and it marks those congestion phases, and you can see here that was there a minute ago, and down it comes, which is actually good news because price action is above it, so maybe it's going to provide a nice platform for the price to move higher. But to get back to the to where the price was here, okay, you've got that not a huge amount of volume underneath it, so maybe it's not going to go very far. It didn't. Went back to the VPOC. Then we get what I call a nice move lower on decent volume. This candle here, a little bit of buying coming into it, which you would expect. In fact, it pushed it back to the S3. This is what happens with the S3. You get price action either side of it, but the Renko would help to keep you in. The trend monitor helps to keep you in. The trend dots you can see here are still red. They're also at the top of the candles, which is what we want to see, means the price is still pushing down. And so down it goes. Now, it didn't stop here because that's just moved down. It actually back into congestion. And in fact, this is sort of the candle that came off. This is the volume, what we call volume support, based on the volume point of control. But you can see it's actually all quite messy. But if you look at it in terms of what you saw at the Renko, this was the pull away. This is where the VPOC was. Then it got to the S3. You saw all that sort of messiness that we had around it. Down it went. And once you start moving sideways, and you know, looking at it on the time chart, you think, haha, maybe the time it's for a reversal. And in fact, if we look at the, here we are, if we look at the hourly, yeah, in fact, when I started, the pound cable was down here, so it's actually jumped up a little bit. So that's kind of telling us that this is, you know, cable is actually on the move. And in fact, on the 15-minute chart of the thing, I mean, you can use this to track the price action for the pairs as well. So you pull them all together and it gives you an indication of whether the move has got some legs to it, as it were. Always going back to the time charts, making sure you look at the levels. Levels will also, you know, they act in this way, and when they coincide with an important level on a slower time frame, so for example on the hourly chart, here we are, we had this break from the S3, this little piece of price action here. It's actually stopped at the R3, at the R2, which is an important level, but I wouldn't say as important as the third. Now, the significance about this third level now is in the fact that where the price is now aiming for. And the other significance about the levels on the hourly chart is that these levels are here for the rest of the week. The levels that you see on the time frames below the hour, not including the hour, are refreshed every day. On the hourly chart and the daily chart, they are there for the rest of the week. So let's go back to quickly have a look at what's happening here. And also you have the lines here. Now what this is telling you is, yeah, the pound is moving higher. This is the, where am I looking at? What am I looking at? The 15-minute chart here. But it's really the move is driven more on the side of the dollar. So it will be a case of, let's have a look. I just tend to focus on the pound pairs. It suits me. I really get to know them. I know how they behave, and I can almost anticipate how they're going, because you get to know them so well. But if you were looking for, you know, and you weren't fussed about a trade, you just wanted a good, strong trade, well, maybe looking at a sell on the dollar, but what's it actually being sold against more strongly? And you know, the one that certainly on the 15-minute, you would maybe look at the Aussie dollar, which tells me possibly, you know, markets are picking up over on the indices.
Hi everybody, hopefully you can hear me okay. Yep, and hopefully you can see my screen. Anna mentioned the indices, so I thought I'd swap over there first. Anna's, how can I put this? Anna's much more is polite about what's been going on over the last few days. I'm a bit more rude, blunt, let's say. When you get these events which occur from time to time, and we've seen any number of them, certainly over the last few years, particularly around Brexit, political stuff, commentaries, all sorts of stuff. When you get the release that we had last Wednesday, which can be viewed in one of two ways, because I could say to you, the markets could react positively because good news, there's no interest rate rises for 2 years. Excellent. So the markets rally strongly. Oh dear, we're going to have interest rate rise in 2 years. Bad news, they plunge. And when you actually think about it logically, are we seriously suggesting, I mean, it's absolute bunkum, are you seriously suggesting that the markets are going to react with, you know, market tops, crashes, all sorts of things being talked about on the prospects of something happening in 2 years' time? And let's face it, the track record of the FOMC and their interest rate decisions is hardly a stellar one. You know, I recall various years where interest rate decisions have been, you know, promoted at the beginning of the year, and eventually they managed to roll one out in December. So what I'm saying is this: when these extreme events occur, you have to overlay them with a sense of logic, because what they are is purely one thing and one thing only, putting it bluntly, and that's they are manna from heaven as far as the big operators, the market makers, are concerned. It's an opportunity to flush out the market, to panic sellers into releasing stock or whatever the commodity or instrument may be. They will step in and buy. It's a terrific. I mean, it is a perfect mechanism for flushing out the market, flushing out the weak sellers, the weak holders, stepping in and buying, and then reforming the rally thereafter. And really, that's all it was about. It's delivered to them on a plate. I'm sorry if this sounds harsh, but that's the fact. That's what goes on, and you have to accept that. And you as a trader have to take that opportunity. It doesn't mean you wait for the reversal to happen. You certainly jump in with the rest of the market, because boy, oh boy, it was moving like a train, and it was moving like a train in the opposite direction yesterday. Fantastic trading. But you have to have that sense of, this is going to reverse. It's not a question of whether it will reverse. It will reverse, because it is just fluff and nonsense. It's nothing more. So it's a short-term reaction, nothing more than that. It's an opportunity for the big operators, say the market makers, to crash the market and reverse. Now, in terms of what's interesting at the moment is, and the reason I've gone to the indices first is because on two of them on the daily, we've now got a volatility trigger. This came in yesterday. This is on the YM, massive move on the YM. I have to say the volume here is hardly stellar, so it's a little bit flaky. So what are we expecting? Well, two things really. We've gone back to the volume point of control. This is on the daily time frame. We've got a volatility trigger. What are we expecting? At the very least, congestion around that particular point, and also probably a reversal back inside the spread of the candle. Now, the second, just moving to the NQ for a moment, this is a reflection of risk sentiment as well, in the same way that the YM and the ES are. Are we seriously suggesting that based on last week's market reaction, this is a market top? No, absolutely ridiculous. Let's go to the ES. This is the ES, and as you can see there, we've got another volatility trigger on here. Now, a volatility trigger on the daily chart is unusual. They don't happen that often. You can see we haven't had one here since, where are we, back to almost the start of the year, I think, or maybe not quite that far back. Yeah, whatever. There's no volatility triggers on here, so we've had one yesterday. So this is significant, and it's significant because of time. We make this point all the time in these webinars. Whatever you're doing in trading, the slower the time frame, the greater the significance of that particular aspect of technical analysis. So if you're looking at a daily chart, whether you're looking at support and resistance, whether you're looking at volume, whether you're looking at levels, whether you're looking at volume on the VPOC histogram, whatever it is, that will carry more weight as opposed to an hourly chart, which in turn will carry more weight, as opposed to a 5-minute chart on the least significant will be the 1 minute. That is the nature of it, and it's purely because of the significance of time. Time carries importance, it carries weight, and therefore when you get these signals on the daily chart, they are hugely significant in terms of what to expect thereafter. So in terms of what's going to happen in terms of indices, what are we expecting? Certainly in terms of the Y, and we're around the VPOC here itself, so we're at the fulcrum of the market. We're back to market balance, if you like. Nothing really much happened up here on the NQ. That's just carried on its own sweet way. And here, as I say, we've got a volatility trigger as well. Now, if we go back onto the time-based charts for, where are we? There we are, multiple time frames. I've got the pound yen up here. Now, this is significant too for exactly the same reason. It's why I went off to the indices first as well, because this also has a volatility trigger. Another huge move. Big rally, fantastic trading day, but we had the volatility trigger. What are we expecting? We're expecting, at the very least, some congestion, possibly a reversal and continuation lower, but at the very least, we are expecting congestion, which is what we are getting. And it's no surprise, when you get these massive days, it's like an exhaustion. It's as if the market has run a marathon the previous day and it's just recovering. It's collapsed in a heap, it's recovering. I'm not saying you don't get follow-through days, but when you get these extreme moves, expect a quieter day, perhaps the following day, maybe for a couple of days. It's what you expect. The market is not going to go up and down in great big stair rods all the time. It's going to be punctuation with pauses, and it looks like we've got a pause on today, and that's part of the reason why, because we've got this volatility trigger over here. Now, if you go over onto the, I think it's the 5-minute I was looking at earlier on, just to see where we are. Yeah, this is really just an example of how a trend develops, how it forms, the things to look for in the downtrend. This is the nice thing with Ninja, and also with TradingView as well, is that the timestamp that's printed at the bottom is matched to your local time. So you don't have to faff around on MT4 and MT5. You do. It's generally running 2 hours different. So you're trying to tie time frames together. So this is 7 o'clock our time. So this is basically when Europe opens. What do we get? We get some volatility candles coming in straight away. The next thing that happens is we've got this very strong, this is on the accumulation distribution. Anna was talking about levels. Levels are so important. This is on the accumulation distribution indicator on NinjaTrader. Works in exactly the same way. If you've got the TradingView indicators, we've developed it in the same way, in that on those platforms, the thickness of the line describes the strength of that particular area. So this area here is very strong. You get these little numbers down the side that actually tell you how many times that's tested and held. But the thicker it is, you don't really need to see them, but you'll just visualize it. So this is a pretty strong level, and it was tested repeatedly, market trying to rally, trying to get through there. We then come down towards 8 o'clock, which is London Open, which is here. You expect volatility. But what's interesting in the price action here, it's one of the things you're always looking at, is you're looking at the wicks. Where are the preponderance of wicks? Are they to the upside, to the downside? Are there no wicks? Are they tiny wicks? So on and so forth. And you're constantly looking at, because if you've got a market that's constantly trying to rally, push up, coming back down, had a little bit of buying, came in there, tried to go up again, didn't really get very far, tried to rally, collapsed again, another effort to rally, didn't really get up again, down again. Then we had another effort. Then we get the London Open. We get a ton of volume coming in here. Effort to rally, never really got to the resistance again. Then the selling pressure starts coming in, good volume under that candle, that looks fine. We get a little bit of a rally, but again, it's trying to rally, trying to rally, trying to rally. We go up here on half decent volume, then we get a 2-bar reversal comes in, then we get a 2-bar reversal to the downside, lots of selling pressure in, so lots of selling volume coming in here, then we're trying to rally again. This looks weak, we've got to pivot to the upside, big wick to the upper body. Is that a sign of strength, or is it a sign of weakness? It's a sign of weakness. The market's trying to rally. There's decent volume driven into that. It's just not going anywhere. It's not receptive to buying. Down we come again, trying to rally again, down we go. And then we come down onto the volume point of control itself, and we start to move through this region. And that's where we're sitting right now. It's, the market is not going anywhere. We're at the volume point of control. We're on the 5-minute, and we're just in a congestion phase. But through the other aspect of this, throughout that entire phase of price action, this was the trend monitor. And really the only time it flickered or changed from anything other than bright red was in this phase of price action here. And it's still bright red, and it's not transitioning yet. And of course, you'd use it in multiple timeframes, as we always do. Just trying to start to rally off that. The same is true on the 10-minute. Let's have a quick look at that. Similar sort of picture here. We had this very strong area here, broke through there, but then immediately reversed back in on a 2-bar. If you overlay that candle on this one, what have you got? You've got one of these, more or less. In other words, virtually no body and a big wick to the upper body. And that's on 10 minutes. So if you were looking at this on a 20-minute time frame, that is what you would see. If you were looking at this candle and that candle, for example, on a 20-minute time frame, what would you see? You'd see a candle with a decent body and a huge wick to the lower body. So you'd expect some buying to come in. But that's what you're looking for the whole time. It's very easy to do with 2 candles, a lot more difficult to do with 3 or 4, which is why we use multiple time frames, because it gives you that information. But this is a similar sort of picture. Resistance overhead, down to the volume point of control, lots of effort to rally, volatility candle, and again, you would see this on 10. I don't think we have one on 5, so that's telling you we're into volatility, which we were. Didn't actually reverse, just went into congestion, and on down we go. And it's really a case of just putting together the entire picture as you go along. This is 15-second, 1-minute, 3-minute up at the top. I'm not suggesting you go down to 15-second. I use it a lot for a lot of scalping stuff. Some people may be horrified by it, but I can assure you it does. If you use it for nothing else, if you have Ninja or if you have TradingView, for example, it is a great way to practice VPA. Let's just flick that up full size, make it a bit easier. It's a great way to practice VPA because everything happens very quickly, obviously, and you get very practiced at reading things fast because you have to. And this little up move, we had a volatility candle here, no problem, decent volume, no wicks. Into congestion, fine, we're moving on up. Got nice volume under that particular candle. We've got moving up through here all the time. We've got, volume is very light at this leading edge up here because there is very little there on this particular time frame at the moment. See what that candle does. Okay, that's fine. We've got rising volume, rising price. That's absolutely fine. Maybe a little bit too much volume in here. And again, comparative nature of candles, what we call benchmarking, is absolutely paramount. What you're looking at the whole time is comparing, this candle with this. They're identical, and yet you've got more volume going in here. So, it's a little bit worrying, not hugely. That one is perhaps more worrying because you've got a narrower spread candle. You've got maybe, half of these ones which precede it, and yet the volume is actually higher than that. So, it's just little warning signals. That one's okay. Volume and price in agreement. Narrow spread, low volume. That's what you expect to see. That's fine. If you had high volume, and that'd be worrying. Pushing on up. That's fine. That's all in agreement. Fine. No problem with that. Just moved. Sorry, chat box is in the way here. Move it out of the way. That's all fine. That's all in agreement. See what this one does. Trend monitor is nice and blue. That's okay. Decent volume on that. That's absolutely fine. It's quite high volume on that one actually. Maybe a little bit too high. Might be seeing a little bit of selling coming in, perhaps weakening a touch. We will see. Okay, I've got a tiny little doji candle up there. Might see a little bit of a reaction now. So that's on 15 seconds. So, that's a decent little move. No great stress on that. Where do we go from? I don't know, maybe 10 pips in that. It's building nicely. So that's on 15 seconds. Let's hop over onto the 1 minute. See what that's telling us. Moving up to the low volume node here, coming out of all this congestion. We broke through. This is the other facet which I've highlighted many times before as well. When the price action builds, if you're on Ninja or you're on TradingView, when the price action builds around the volume point of control, what you will often find is you'll get these channels of support and resistance with the heavy dashed lines. So it gives you really clean levels to where you might put a stop loss, here, well below here, and you've got all this as comfort in terms of the move higher. That's on 1, up to 3. You can see the trend monitor, You know, transition blue, transition blue, transition blue on 3. 5, we haven't done anything yet. You wouldn't expect it's too early yet for the trend monitor on this time frame to actually start signaling this as a potential move out from the bearish picture we've seen so far. Just looking over, I'm just going to pull this across for a minute. This is on TradingView. These are basically the 4 indices. These are what time frame I've got these on. That's on the daily. Let's change that over to 5. I think on 15. That one's on 5. Let's put that on 5. That's on 15. Let's change that to 5. That's on 5. That's okay, and that's on 5. So basically, we've got the pound here, and this is what we're starting to see. We've had a lot of congestion of the pound. It's now, so this is on the pound index, remember, so this is now starting to flick up a little bit, maybe finding some support here and flick upwards. This is the yen index. So if we're on the pound yen, this is what we want to see. We want to see the yen falling and the pound rising, and that's why on this 5-minute time horizon, that's why we're starting to see a bit of a move in the pound yen. Equally down here, the dollar, this is the dollar index, so this is dollar is starting to fall away. So if we're on the cable right now, we will be seeing a rally in cable, so maybe a little bit of a move developing in the pound dollar and possibly in other major pairs in, yeah. And over on the euro is in congestion. It's been selling off for much of the morning. It's now moved into congestion phase in the same way it was over here earlier on. So that's where we are in terms of the 4 indices, currency indices, rather than the equity indices. Let's just see how this little rally is getting on. Just keep an eye on that. It's going to come off a little bit. Let's just pop that up in 15 seconds, go back to the real quick stuff. Okay, you know, this is a really nice example of VPA in action. This is what you're looking for all the time because it gives you the signals. You've got this little rally here, and then the volume starts to fall away, and you think, okay, that doesn't look terribly good. Because in an uptrend, you're looking for rising volume, and in a downtrend, you're looking for rising volume as well, because it takes effort to fall as it does to rise. We're all familiar with the concept of gravity. We all know it takes effort to get things into orbit. You know, that's something we live with every day. In the trading parlance, when a market falls, it takes effort. So if you're seeing markets crash around your ears, as we saw last week, and the volume is not supportive of that view, then clearly it's a fake move. And that's what we were seeing in many markets. The volume was not in alignment with the spread of the candles, because if a market is falling rapidly, you expect to see heavy volume coming into the market. And if you're not seeing heavy volume coming in that is indicative of heavy selling, then it's not a true move. In other words, the market makers, the big operators, are not participating. They are simply they are crashing the prices. The sellers are dumping, but the market makers themselves are not participating. And that is the giveaway always, to identify whether these dramatic moves are genuine or false. And it's the only way you can do it. You can do it partly by gut instinct. You know, I have to say I do that myself, which is, I'm not saying it's perfect, it's imperfect, but if you analyze it logically, you know, truly, are we saying that in 2 years' time, interest rates are going to have a major impact on market behavior now? I don't think so. We all know interest rates are going to go up. Interest rates are going to go down at some point. It's just a fact of life. So those are things you're looking for the whole time. And it's the power of volume price analysis, because what volume price analysis does for you, it gives you a heads up as to what is likely to happen next. It's not a guarantee, it's not cast iron certainty, but it's the probability that this is what is likely to happen next. And if you see things like this, where the volume is falling away and you've got a rising market, expect this to happen. Don't sit there and think, oh, why has that happened? Well, you know, you were expecting it to happen because of that. So your reaction to this reversal when it comes is not one of panic. It's one of, okay, fine, you know, it's what I was expecting. You're much more relaxed and laid back about your trading decisions. And that's what VPA is about. Is it about applying logic to your trading decisions as opposed to emotion? And that's the differentiator of volume price analysis, to put it in a nutshell. we're trading around the volume point of control now. So, what are we expecting? Well, congestion. And you start to set your levels. You start to look at this and think, right, okay, well, if I'm going to, let's say we're holding a position, or maybe we're looking to jump in. Maybe this happened and we thought, no, I don't like the look of this. I'm going to close out and sit tight for a bit. Okay, so what are you looking at now in terms of getting back in again? And you start to look at it in terms of levels. To the downside, to a short position, you'd be looking below this sort of level, very simple pivot point. That's all there is at the moment. And to the upside, you'd be kind of looking beyond this level. Once we get beyond maybe 37, 38, 39, something like that, then you'd be looking to jump back in again to this move. It's a very simplistic analysis of the chart, but that sort of analysis would apply if this was an hourly chart or a daily chart or a 4-hourly chart. It doesn't really matter, because everything you do in trading, I don't really care what this is up here. This could be copper, gold, a soft commodity, coffee, metals, indices. It really doesn't matter. It's all the same. You just have to understand obviously what chart you're on, but in terms of the way the technical analysis shapes up, it's identical. It makes no difference whatsoever. We're starting to try and break through this level. Maybe that's a little bit too early. We want to maybe get to 39, maybe even 40 before we jump back in again. A little bit of weakness on that particular candle. You can see it. The market tried to rally. Bit of a wick there. Decent volume going in onto that candle. So there's some weakness there. It's just trying to rally, but it's not getting anywhere. Just see where this goes. If we can just break through. Okay, a little bit of support coming in on that candle. Now you've got a little wick to the underside of the candle. So you've got a little bit of support coming into that candle. In other words, not selling. But we're very close to the volume point of control still. Maybe come down and test it again. And then as you build these levels, it then reinforces the level at which potentially you're going to jump back in again. So we failed at that level. So 138, 153.38. We've got a sort of level set there. We want to get through to 39 or 40 before we jump back in if this is going to carry on up to the long side. See if I can spot anything else down here. Down onto the slower time frames. This is on 5 minute, and obviously again what you're looking at here, that was what I was talking through there was very much a scalping opportunity. What we're looking at here is a slower perspective on where this market is like to go in inverted commas in longer term, and what this particular pair has got to do. It's got to battle through all this stuff here. This volume sits all the way in this area. There's no tiny reduction here maybe for a couple of pips, but generally speaking it is pretty much solid. So for this to push through here, you've got to see some decent volume in here. You've got to see rising volume, and then the next thing you're looking at is, well, if I'm going to take a trade to the upside, first of all it's got to batter its way through this lot. And then we've got this very solid level back in here at 60. So we've got 25 pips here, possibly delivering on a 5 minute time frame, which is fine. Absolutely no problem at all. The problem is you've got all this great wealth of volume sitting in here, which is going to hinder progress, because volume on the VPOT acts in exactly the same way in terms of price-based support and resistance. So volume-based support and resistance, it's exactly the same principles as price-based support and resistance. There's no difference. So if you've got large amounts of volume sitting there, then the market has to find effort to get through there. It's going to find progress through there really difficult. Once you get out the other side up here, the volume falls away dramatically. And once you're up to 65, no problem at all, because you've got no volume to battle with, and probably no price-based resistance there either. So you're free home and away. But that's what you're looking at the whole time. You're looking at how much can this trade deliver for me given what is on the chart. This is not about those ridiculous risk and reward ratios that people talk of in forums and all the rest of it, which are a load of hogwash, frankly. The way we look at it is to the chart. The chart will describe for you the opportunity that it is likely to deliver, and your decision is based on the technical analysis of the chart and not on some theoretical value that you as a trader have to have, and the market therefore has to deliver. The market doesn't care about you. So you have to do your analysis, you do it off the chart, and you do it in that way. It's very, very simple. You might not be able to see it. We've got a cluster of two little levels here on the support on the accumulation distribution. So they've really capped that level off. On their own, this obviously is a very heavy area, very significant area. These lighter areas, thinner areas here are less significant. However, when you get these little clusters together, then they become more important. And as you can see here, we ran into that and it just capped it off pretty much the same it did here, capped it off there with a pivot. You know, it's not looking particularly strong. And if we go back onto our 15-second chart, just to round off, you know, we set the levels there, didn't really get through, plunged through there. Now we're coming down, you know, where are we going to? You can see that the trend monitors transition red. We've got a potential very strong platform of support in here. We've got a low volume node here. So, you know, theoretically it should move through there pretty rapidly, but then it's probably going to find some support here with this big blue dash line here if it gets down to that level. And on we go. Let's just see what's going on in terms of the indices again. Let's pop that up. There we go. So just a reminder, this is the pound. So, you know, this is what's going on in terms of the pound. So still it's creeping up, but I wouldn't suggest any more strongly than that. This is the yen, just started to roll. Now, if that continues into the US session, then we should see a pickup in US equity markets. But as I say, given the volatility trigger on the daily timeframes, you know, it's more an expectation that we'll see some sideways. Plus, if we've got anything going on Capitol Hill, then that probably factor that in as well. This is the dollar. Was weakening. It's you know, it's not exactly falling fast. It's dribbling lower, and the euro at the moment is in sideways. So that's where we are in terms of indices. Now, one very quick thing I want to show you here. This is something we're working on right now. Moving to a different market. This is Bitcoin and cryptocurrencies in particular. And what we've actually, or we're in the process of developing, will be available relatively soon, is actually an equivalent of, this runs on all time frames. So I put this over to an hour. Let's change that over to an hour as well. There we go. This is actually equivalent to the currency strength indicator. It's what we call the cryptocurrency strength indicator, believe it or not. It's not very original, I appreciate. But essentially, it does a similar sort of job, because what we've done is we've created this to give you a visual perspective on what is going on across, this is on 8 cryptocurrencies. With the one here, the red line, is actually the equivalent US dollar, but it's actually the tether equivalent, because all of these are quoted against the USDT, which is the tether dollar denomination against which they're quoted. They are quoted against the dollar, of course, as well, but these are all quoted against tether. So what we've done is we've basically created this indicator against tether. You've got the cryptocurrencies down here, so they work in exactly the same way as they do on the CSI, where you get individual strength and weakness, but obviously this is a cryptocurrency pair, if you like, rather than on the CSI, which is individual currencies. But in addition to that, what we've also included is the option to select which particular cryptos you want on your chart. So you can actually choose any of these. These are all on TradingView. I'm not sure this indicator will actually be developed for other platforms, because it's so variable in terms of what cryptocurrencies is available on MT4 and MT5, for example. We will see. We're not quite sure at the moment. So you can basically select, deselect. You can have a few or as many as you wish on there, up to the maximum. And in addition to that, of course, you can also click them off. So if you just want to have I don't know, let's see, where's Bitcoins there? Show currency 1, take the others off. There we go. So we can just, there we go, we just have Bitcoin, and that's against Tether, and that's what it's doing at the moment. And very much works in very much the same way, getting up into overbought, oversold, overbought, oversold, you know, rallies. Are we looking for trends? Are we looking for overbought, oversold conditions? And there's one thing I can guarantee you with any of the cryptocurrencies, they move. You know, if you're lacking volatility in the forex world, then I can assure you, you get it in spades in cryptocurrencies. It's a wild ride, but as I say, they certainly move. So that's one we're working on. If you have the full package of indicators for TradingView, you will of course get that free of charge. That is one we're working on. We're probably going to work on a follow-on to that. Then I think we're working on a volume weighted average indicator as well. So as I say, if you have the full package of indicators, you will get all of these free of charge. TradingView is absolutely on fire at the moment in terms of customer base. It's extraordinary. It is a great platform. It really is a very interesting platform. It's great to use. If you have any accounts, any brokerage accounts, I'll just pull it up here. You can literally link them through. You've got FXCM. I haven't got that linked on at the moment, but you know we're running that little account at the moment. You've got Tradestation and NinjaTrader, one called Global Prime, Saxo, one called Tickmill, Capital. You've got there. And you can link them straight through onto the account. It's very simple through the API, and you can trade off the screen. It's just a great way to trade. Let's just have a quick look at the multiple CSIs, a quick scan around. Yeah, you can drop in different cryptos. Any that are on that list, let me just pull it back for a moment, sorry. Just pull it back again. There we go. That's all the brokers that are available at the moment. So they are all ones that you can hook through straight away. If I just go back in here, let's just put them back all on again. There we go, 7, and that's it. So basically, you can select which cryptocurrency you want on any of these. So all of these are available. So you've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So there's 13 of those, 12 or 13 of those. And you can select those. I think the maximum, I'd have to check with our developers, but I'm pretty sure the maximum is the 7 or 8 you've got here, the 7 and the tether, which is the red. But you can then select, you can add any of these on. So if you want to switch out, you want to change over, or one that we've got on here as the default is not there but is here, then you simply switch them over. It's as simple as that. And the beauty of it is that there's 2 things. First of all, obviously we've got this is crucial. This is the dollar, this is tether, and this actually drives a lot of the moves, believe it or not. Yes, of course you see. The second thing that's nice about it is that generally speaking, these will all move together en masse. So it's a little bit like the currency matrix, for example, where you're looking at a matrix of a currency and you want everything to be going in the same direction. You know, when we talk about the full house on the currency matrix, where you've got, everything is stacked in place, where you've got maybe all the M pairs, they're all at the bottom or all at the top. That means that everyone is universally buying or selling the yen. Well, what it means here in cryptocurrency land is that universally everyone is either universally buying or universally selling cryptocurrencies. Now, when you get down to the 1-minute time frames or the 15 seconds, obviously you do get some divergence, but generally speaking, what you will find is that they will move en masse. There's very little variation, certainly on the slower time frames at any rate, but the thing that really describes their price action is the fact that we've split out tether here, because tether is the divergence force to drive the market in the strong trend. So when you've got tether rising very strongly, and you've got the crypto market en masse moving strongly in the opposite direction, you have got a trend and a half. It's as simple as that, and that's what you're looking for the whole time. Now, whether you jump in on the crosses, whether you're looking at reversal points like this, they are great, okay. That's down to you and your tactical approach. It's as simple as that. But it's hugely powerful. We're looking at a section option on cryptos to do, I think, a combination of something to do with a heat map and the matrix, something along the lines of to give an idea of the strength of the trend. So But what we are going to do is we're not going to wait to release them en masse. They will be released piecemeal. So once the cryptocurrency strength indicator is developed and tested, and we've been testing it here for a few days now, and it's absolutely fantastic. Then it will be, once we've done all the support work, the support pages, the usual stuff we have to do, the support pages, get it into the full package, get it into the shop, then we will be launching it. And just keep an eye on labs, Quantum Labs, because that's where it will be announced first. Where are we going now? We're carrying on up. The pound's kicked up, the yellow line. The yen is rolling over. This is on 10 minutes. So, where were we on the 15-second? We must have broken through. Yep, we're all off to the races. Where were we waiting for? We were waiting for this 37.38. Yeah, we're well through there now. We're up to 40. Trend monitor's transitioned. Carrying on up. 2-bar reversal. Trend monitor. It started to change here, but it never got through on the 1 minute. And it's gone back into the bullish again. So, it's the power of the trend monitor. It goes into these phases, but then comes out the other side. It takes a much more considered view of price action. This has now transitioned. This has transitioned now. Remember, before it hadn't transitioned at all. We've gone, and what's interesting about that particular color change is we've gone straight through. So we've gone straight through from red into blue. It doesn't automatically always have to go through this color sequence here of darker red, darker blue, and bright blue, and out the other side in the other direction. But on this occasion, it went straight through. So it's obviously saying, this is a pretty strong change in trend. I'm not pausing here. I'm confirming this is a strong trend change, and we've got a change here on 10, and of course over on the daily, there's nothing changed at all yet. You wouldn't expect to see anything there. Sorry, I run way over time. Were there any questions, darling? Sorry, I always have my chat box closed. Okay, fine. Right, just very quickly to wrap up, point you at the various bits and pieces. This is where you'll find the Forex education program over at Quantum Trading Education. It is the complete Forex trading program. It took us 2 years to put this together. It's huge. There are something like 450 lessons, I believe, something of that nature, don't quote me, and 250, 300 hours of video. It's massive. It will take you time to get through, I can assure you, but what you will learn there is all you need to know to trade this market with confidence, and that's why it took us so long to put together. It's not some 5-minute fly-by-night program. They're all the modules there, everything you need to know, and a lot of it is not just simply common to Forex. We do actually have a lot of stock students on here now, because Forex sits at the heart of everything, and it is the gateway of money. That is where the money flow goes. If you're cashing in an asset, you've got to go to cash at some point. So it's somewhere along the line, you have to go to convert to cash and come out the other side, unless you're staying in cash, of course. But if you're selling commodities, you've got to go to cash. If you're selling stocks, you've got to go to cash. That's why the Forex market is the kingpin of everything. And it's why the sentiment is revealed so clearly there, and why from that everything flows outwards. We bolted in the funded Forex program to give our students the opportunity to trade our money. Let's click that one there. Let's go to the same place. You start with one of three size accounts, either 5,000, 10,000, or 15,000. You decide. We set a very simple monetary profit target. Once you've achieved that target, we give you a 35% kickback. And at this level, what you are doing is you are basically proving your consistency to yourself and to us. And once you've done that by achieving the target within the parameters of the risk and money management, we then multiply that amount by 4. So if you start on 15,000 here, if you decide to go on 15,000, that's fine. We give you 60,000 to trade. And in addition, you can expand your repertoire from the currency pairs into the indices. You've got the DAX, you've got the US indices, and also UK, and also gold. So you can then trade those markets as well. And once you start at that level, then you start earning on a monthly basis. So you get a monthly rebate of profit. paid at 50%, all the way up to you trade your way up. We double the account, so if you went 15, you start 15, you go 60. Then we start to double, so you go 60, 120, 240, right the way up to 2 million. And once you start hitting the 1 million level, that's where we increase the profit further to 60%. So you are earning substantial amounts of money at that level, and it's at no risk. It's our money. You know, you're not going to lose your money. You can keep your money, trade it in your account, and simply trade ours with no risk to yourself. But as I say, the reason we put it in place was so that our students, if you join the program, it's optional. You don't have to join it. It's an optional there for you to leverage your knowledge and actually learn to trade large size money accounts in the same way that you would trade a small size account. You're just replicating, rinsing and repeating what you've done on a 5,000 account on a $1 million account. It's no different. Exactly the same principles apply. That's where you'll find Anna, annacooling.com. All the books are up there on Amazon, Kindle and paperback. I can't tell you, it's just such a pleasure to see, you know, the wonderful comments that come back up there on Amazon. I think there's something like 700, 800, 900 5-star reviews now on the VPA book, and all the others are going really well. Also, all the links to all the sites there too. Finally, just for quantum trading, the indicators, you'll find them all here at quantumtrading.com. MT45, single license, NinjaTrader 7.8, single license, TradingView and Tradestation, 2 versions of Tradestation. I haven't pulled it up today, I've just got it down here at the bottom. But that's Tradestation Global running there. And what you're seeing there is radar screen, immensely powerful. This is driven by Interactive Brokers, this particular account. That's how Tradestation Global works. This is Tradestation 9.5. And what you're seeing there is the fact we've got the trend monitor here in radar screen. So we've got the quantum trends, we've got the trend monitor. And the fact that these are all blue pretty much universally, certainly in terms of New Zealand dollar, pretty much down the piece across the 1 through 15 timeframe, it means that we are seeing some selling of the dollar and buying of the currency majors. So that's on 9.5, and then there's Tradestation Securities, which is on Tradestation version 10 and above, and that's driven through the Tradestation Securities data feed. And radar screen is immensely powerful. You can have up to 1,000 different cells operating simultaneously on there. If you invest in one or more of the indicators, fantastic. We will always credit you if you want to upgrade. Maybe you start with one, then you want to buy maybe a dashboard or something else. Fine, we give you a credit for that. If you want to upgrade to the Forex education program, again, we give you a full credit. We always have done. And if you invest in the full package, as I said earlier on TradingView or MT45, NinjaTrader, whatever, if you have the full package, you will get whatever indicators we develop free of charge, added for nothing. It's as simple as that. It's something we've always done since day one. It's just our way of saying thank you for investing in us and giving us a chance. So it's just our way of saying thank you to you. That's it. We are done. We are back at 3 o'clock our time, which is in, I think it's 3 o'clock. I'm pretty sure it is, which is in about 2 3/4 hours, something like that. So we will see you then. If not, enjoy the rest of the trading day and the rest of the trading week. Have fun, stay safe, and thank you very much indeed for coming along today. Hope you've enjoyed it. Hope you found it useful and perhaps learned something you didn't know before. So see you soon, and bye for now.